Welcome back to the podcast. I'm Sten Morgan here with Andy Traub. And on this podcast, we focus on becoming elite at what we do as financial advisors. We believe there's an average path and there's an elite path. And when you take the average path, someday guaranteed you will look back and say, I wish I did something different. And so our goal is to challenge ourselves, but also our community with how do you do something in maybe 3 years it takes most people 10? And that's the filter we run everything through here.
Well, thanks for that, Sten, and it is good to be here with you as usual. And I wanted to start with, we have a free training that we're going to be offering, and this is actually on November 22nd. So if you're hearing this afterwards, after that date, that's okay. You can still go to this URL, and you'll just get a replay, which is great. But if you'd like to attend live, November 22nd, which is a Tuesday, we're going to offer at 9 a.m. and then 3:30. And you can sign up for that at stenmorgan.com/50K. The premise of the training is how to add $50,000 in planning revenue in the upcoming year. And so for those who have not started at all, we have some practical teaching, really focusing on speaking on ideas, focusing on ideas instead of products, really mastering that first meeting. That's something that, and just talking with advisors, they just know that if you can get that first meeting, like if you can lock that in, then they'll stick with you, right?
It should be an experience. Like when they leave, it should feel different than like I was just spoken at and presented to, and I have no idea what to do next. Like, but if it's a different experience, they leave there feeling like I need to do that again soon.
And was it you or I was talking? I don't know if it was you. I was talking to an advisor this past week when they said that they had a client who left and said, it's the first time we've had a meeting where we didn't have to leave and then go Google stuff.
Yeah.
Is that you or?
Yeah, no, I had a Zoom meeting with some clients with other advisors, and they're like, this is great because it feels like we don't have any homework. Like we don't have to call to verify the things you said with somebody else. So
yeah,
that was a good meeting.
Well, then the other thing, and we're going to talk about this today actually, is just being confident and clear enough to give actual quantifiable numbers to the ideas that you're sharing. I think that it's just drilled into advisors, mostly from a compliance perspective, and just like an integrity of like, oh, I guarantee you this much. Like you're not in the business of guarantees unless it's a death benefit from a insurance policy or something. But to really quantify, because as you like to say, people like to solve big problems, not small problems.
That's right. Yeah, if we leave this big gap of understanding and we're just hoping they realize they should do something, like that's our fault.
Yeah.
And there's always assumptions built in, like, hey, I don't know yet if this is going to play out exactly this way, but let me show you what another client has done. Then at least they can realize like, oh, that's actually a big enough problem for me to think about, or I'm not interested.
So at this training on Tuesday, and again, if you're hearing it after the fact, you can go back and watch replay, but we are also going to have members of our community who are actively shifting their business towards planning, as some of you are looking at doing for 2023. And we also have members of our community that have already made that shift and then made some changes based on things we've taught. So it's not just Stan and I talking for 45 minutes. We'll have other advisors there, Wes and Jason, I think Andy and Patrick will be there
nice.
at one of the other two. So you're going to hear from other advisors as well about their real world experience.
Yeah. And what I've loved about this so far is that we have advisors that have never charged for advice, that are new to the business, and they're realizing new revenue that's going to help them scale faster. They can hire people better. They're getting revenue that's not AUM that takes a while to build up. But then we also have advisors that are making amazing money in AUM, and they're realizing, wait, I can just actually start getting paid for all this time away. I'm giving away for free, but I don't have to stop managing assets because I enjoy that. No. That no matter where you are on the spectrum, you may say, hey, I feel like my ideas and time have value. I want to learn how to charge for that.
Yeah.
Great. Or you may say, hey, I'm trying to build this business the old-fashioned way and it's taking too long. How do I start building and presenting myself in such a way that I can demand a great fee and am worth it, and the client's happy to pay me? And so it's really, there's so much mindset in it, but also process. How do you present the proposal? Like there's a lot of pieces to this, but if you can go from charging no fees or just a little fees to putting a process in place, and our training is like go from 0 to 50K.
Yeah,
like
absolutely.
What else are you going to do that's going to do that, but also lead to more business?
Yeah, absolutely. So stenmorgan.com/50K, encourage you to go there to sign up for that, and there'll be a link in the show notes. We're actually releasing this episode a day early in hopes that you'll get this in time to go register. We already have 100 folks registered for that, so we hope you'll be able to join us. And one other thing we want to mention, and whether you're watching us on YouTube or not, but if you're on YouTube, you'll be able to see the screen. We do have registration open for our How to Charge live event. you go to stenmorgan.com/how-to-live for that. That's January 17th and 18th. And there's a great video on there and lots of explanations and details about what are you actually going to be learning, who is this for, what are the results of the people who have already been through the program, all those numbers are there, where you're going to stay. We also have a great photographer coming in. We're going to include free headshots for some really good professional shots that you can use for all your marketing. And if you have other questions, you can also go to that page, stenmorgan.com/how-to-live. And at the very bottom, you can click on a button there if you wanted to meet with me and ask a question. There's some scheduled time slots there as well. So with that, Sten, we're going to go ahead and dive into today's topic, which is 7 ways to increase your planning and consulting revenue. And listen, I count you as one of my dearest friends, but I will also say on a professional level, one of the reasons I really like working with you is that you are just tenacious. You have very little tolerance for things that are not applicable. Like they have to go. Like, okay, but what do I do next?
Yeah.
Right. Like, and again, inspiration is great, right? But like perspiration is what works.
Yeah.
Right. And so I say that because as we were working on these ideas, I was like, I can't. Here's my first one, and it feels good, and then we change half of them again because it has to matter. It has to be something you can do. So wherever you are, whatever you're doing, we're going to plow through 7 of these, and they are things that you can do to increase your consulting and planning revenue. So, Sten, go ahead and start us off.
Yeah, and these are all meaty, so these could all be an episode on their own. But
it will be eventually.
Yeah, we're gonna tease it. We want to get you thinking about it. Hopefully, at least one of them you can say, "Hey, I'm going to focus on that one and make a difference." Yeah. The first one is find free ideas, and one of the biggest obstacles we've faced with advisors is they say, "I just don't have the knowledge." Right. Like I've managed money for so long, I know how to sell insurance, but you're telling me to go charge for my time and ideas, and where do these ideas come from? The goal is not to become an expert in everything. You would never get to see clients. You'd just be reading and studying all the time.
We've had advisors go, "Oh, should I go get my property and casualty? Should I go to, like license or whatever?" And we're like, whoa. Like,
nope. Yep.
Wouldn't it be great to have CPA level ideas without having to become a CPA? Sorry for you CPAs.
That's
but,
right.
You do you, right?
Oh yeah, we need you. Yeah, please.
Right. Yeah. But the idea is simply go get free ideas without having to go to school for them. Right.
Every idea now that a client has implemented and they think of us as, man, they're geniuses, I got from somebody else. Whether that was cost segregation, R&D tax credits, like we are the curator of great ideas because we have become really good at attracting those ideas, documenting them, remembering them, and then learning how to teach them to a point.
Yeah.
But if I can sit in a room and talk to a business owner that owns a couple commercial buildings, and this happened 2 weeks ago with a client that was a consulting client for about a year, and then we got together and like, oh, I have this investor. Together, we're going to go buy this building. We're going to renovate it. We know enough about cost segregation to say, okay, well, how much did you buy the building for? Okay, what improvements are you putting on it? Okay, well, based on another client that worked that was similar, their cost segregation, they saved about $300,000 in year 1. If you're buying real estate and renovating it and you could get $300,000 back to put into that project, that's a big deal.
Yeah.
And then they're like, oh, well, we have this other one that we built a year ago. Can we do it with that one too? Well, probably. Let's call the CPA. Done. And
they're like, oh, you need a CPA, we're out. I mean, they're like, that's great.
Yeah. And then we are the ones that brought the idea. And so there's so many ideas like that, big and small. Every once in a while, you're going to get an idea that's going to apply to a client that's a monster. That's, I have some where I've saved a client $300,000. Another where it's like, hey, an R&D tax credit. Here's $250,000 you didn't know you're going to get. And you look like, you just save them and they're a client for life. Most of them though are, hey, here's a $4,000 idea. And you add them up and you're like, hey, in hindsight, after an engagement, you can say, hey, all this stuff saved us this much money.
Right.
But on the front end, you need to get deep enough to show them, hey, you need me on the team. I'm your coach. I'm showing you things you didn't know were available to you. And when you engage with us, because I'm inviting you to join a process with us. Yeah. I haven't solved all your problems yet, but I'll help you. We're going to go find those experts to help implement it.
I was talking with an advisor this week, and it's honestly, I met with him like, I don't know, last week. And then I see another appointment set up like on Monday, and he's part of our community. So, we meet pretty often. I'm like, man, we just talked, what's going on? He goes, well, that opportunity I told you about, like I got it, but like now he's giving me all his paperwork. And basically he was just nervous. Yeah. He's like, we took it to the next level. What do I do?
They said yes. I didn't know they were going to say yes.
I didn't know she was going to say yes, but like, what do I, but so it was, hey, go in with asking a lot of questions. But I said, just remember, you're not the solution to all the problems. Mm-hmm. You're the conduit. You're the connection to the solution. Yep. I was like, by the way, how old are you? You sound like you're like early 20s. Like, I'm like, 31, 32. And he's like, I'm just nervous because like it's my first one, but it's like it's a big potential client. And I said, isn't it fascinating that he wants to keep working with you? Because he doesn't know that. He doesn't know that. He said he just knows that he really likes the way you work with people.
Nice. Yeah.
Right. And it was an approach of I'm not going to push you to a product. I'm just here to give great ideas. And this person who, I mean, the numbers are really big.
Oh yeah.
But this advisor, my point is you can do this right away. Yeah. Because it's not about you. It's about great ideas.
Yep. And the client needs to realize in the meeting with you that you have access to these things, that you know more than they know, that you are applying enough specific elements to the idea that like, oh, that could actually benefit me more than your fee. And by the time you get to the proposal, you're going to show them some ideas that already you've paid for yourself.
Oh, for sure.
So once you get there, and part of it again is the advisor head trash, and we'll talk more about that. But ideas, like you will become a magnet for great ideas. So set aside that, man, I got to do all this studying and become this person I'm not. No, they're already out there. All the ideas I'm using, you can use. You just have to get confident presenting them.
Yeah. So let's go to quantifying the value of ideas. When we talk about that, give me some examples of ideas that you have found are easier to quantify for people.
Yeah. And we'll spend some time on our live event doing this together. Yep. We'll have whiteboards up, and I'm going to show you. And once advisors see me do it, they're like, oh, that's it? And it's like, yeah, that's it. Like, and there's some nuance to it, and you have to practice it. I'm in my whiteboard room sometimes like, oh, it's that illustration look good? How am I going to float? Like, be prepared. But the ability to quantify an idea, to remove the question mark of, is this relevant? Is it worth my time?
Right.
And that could start as simple as, hey, have you funded, do you know you're eligible to fund a SEP IRA? Or maybe the client's funding a SEP IRA with $10,000 because their income limits them from doing more. And you say, well, have you heard of a solo 401k before? No, what is that? Well, with a solo 401k, the same income limits don't apply. In a solo 401k, if you make $60,000, you could probably fully fund the plan with all your income if you wanted to. I didn't know that. Well, yeah, if you went from funding it from $10,000 to say $50,000, that extra $40,000, assuming you're at a 25% tax rate, that'll save you an extra $10,000 a year in taxes. If we do that for the next 10 years, that's a $100,000 idea. Mm-hmm. Now I've just taken a lot of the fog of that idea away and showed them this is important. Do you want to save $100,000 in taxes over the next 10 years? That's just one idea.
Right.
All the way up to that cost segregation example I gave to you, where I was like, okay, tell me more about the building. What is it looking like? And same with the R&D tax credit one. These ones were, I had to call the CPA locally that specialized in these things and said, I need 30 minutes for you to coach me on this.
Yeah.
Send me all the paperwork you have that I can read of all these different tax credits that employers have.
What's in it for the CPA?
The potential case study, the potential of, and a lot of these CPAs will say the study costs, the fee is not to exceed $10,000. Okay, well, if the client saves $250,000, like they'll be happy to pay that because this is something they didn't even know existed. Yeah. And all you're doing is accelerating the depreciation sooner. But would you rather have $1 today or $1 20 years from now?
Yeah.
Give me the $1 today. You know, inflation's crazy. Like I can do something better. Most business owners or investors want that dollar now. Yeah. So it's that whole spectrum. It's the simple idea that helps you justify, hey, I know you don't know me yet and you haven't experienced me, but here's some free stuff that's going to give you some return on your investment, all the way up to the one to where you see their eyes get big and they're like, this client's like, hey, when can we start that? Because now he's seeing $250,000, $300,000 he didn't know existed, that he's already thinking about, okay, how can I put that to work?
Absolutely. This is one of my favorites. Maybe I should have worked it but name your price.
Dude, you put the mic drop in the middle.
Sorry.
No, I'm kidding.
Pick the mic back up.
That's right.
We've got 4 more after this. But name your price. And by this, we mean, and I think this is what's hard. You could go to bed on Friday not charging for your advice. Mm-hmm. You could wake up on Monday, meet with a client, and say, for me to put this plan together, it's going to be approximately this much.
That's right.
Like,
I didn't charge the person on Friday, but I'm charging you. Like that is kind of a mindset thing to overcome.
It is. But what's funny is how many advisors we talk to, and I'm like, "Are you doing plans? Yeah, we're doing plans. Do you charge me for that? No, it's just included." I mean, I literally had this conversation this week where I said, "Do you charge for your advice?" Yeah. Okay. Well, what are you charging? Well, we include it with AUM, and I was like, "Hold on, I don't want to be rude, but you're not charging for your advice.
Yeah.
Like separately. You know what I mean?
And the head trash exists at a lot of levels. The advisor level, obviously, we see that all the time. But I've spoken to firms where the management is the head. They're like, no, we're not going to let anybody charge over $500 for a plan. I'm like, why? you don't think they're valuable, you don't know enough ideas. Like, so it's almost sometimes top down to where it's like, you got to get the manager, the general partner, whoever, to realize, like, with some parameters, because they don't want a rookie advisor going out and throwing all these crazy ideas out and getting in trouble. But you need to understand first that this is valuable. And if you are questioning it, you need to realize, like, quantifying an idea to a client may also be quantifying it to yourself.
Absolutely.
So that when you go to put the proposal together, you're like, oh man, I just found them this much money.
Right.
Of course I should be able to charge them this. And that doesn't mean the goal is I'm going to charge them as much as I can until they say no. But you also need to run a great business, and the fee has to be enough that if they never buy something from you, it was still a great client.
Yeah.
That it was a win-win. Not, I'm going to charge this person $500, but man, I got to get them to buy this insurance policy really quick. Or man, if they don't transfer assets or buy this annuity, I'm going to be frustrated whenever they call me.
Right.
Then you undercharged.
Yeah. And so part of that is a term that I've heard before, but not a lot, which is sometimes you have to borrow confidence from other people. Mm-hmm. Sometimes you just have to go, okay, how did you did that? Okay, well, I'm going to do that.
Yeah.
Right. And we get that. We get people who have gone through our program in our community, and we'll be on a group call, and it's like, hey, everybody, just I'll say, hey, everybody got any news right now? Anything that needs to know about? And they're like, yeah, I got this proposal right now, and we're like, man, you got this. We believe you can do this. You're worth it. And like, okay, great. And sometimes you just have to borrow that confidence from someone else.
And what's the worst that can happen?
What was going to happen?
They say no.
Yeah,
like
either you're going to make money, or you weren't going to make money, and if you weren't going to ask them, you weren't going to make money. So your chances are much higher. Yep. But you have to name a price. You have to put a price on it.
Yep.
The next one is do what you do best. You have to optimize either with the right people or the right system so that you do what you do best. A quick analogy or metaphor might be that you see this. I'm a Colts fan. We just got a new coach. And he walks on the field, and somebody hands him a headset, and someone hands him like the plays card, the card with all the plays on it. Like, he didn't have to worry about like the batteries in the headset. He didn't have to worry about like, is the plays card did I leave that on the printer? No, like someone else did that, because he just needs to show up and just coach, right? Yep. And I think for you as an advisor, what if you could just show up and be the idea person, be the person who communicates these ideas, be the person who communicates and has confidence and has all these years of expertise. And I think, Stan, there's a few different ways you could do that: systems or personnel, right?
That's right. And it's a progression. When I started financial planning, it was essentially me.
Yeah, yeah.
And the hard part there is a meeting really took 3 hours. There was the prep, there was the delivery, there was the kind
1 hour
the
meeting would
debrief.
take 3 hours, you're saying? Okay.
Yeah, so of my time.
Right.
And that wasn't the best use of my time. And so at that point, say my capacity for planning clients was 20, because it was all me. Like, I only had so much time. To then having a system to where, Chris on our team would be in the meeting with me taking notes. I would still have to do some prep. He would take notes for me and do the debrief. So 3 hours just turned into 2 hours of work. To where now, with Bard, director of our planning department, and Chris working, one or both of them are in the meeting with me. They've done the prep work. I show up. I may be doing 45 minutes of work in the meeting. They do all the debrief, follow up with the proposal, schedule the next meeting. So now our capacity for planning is probably 100 a year. And that's just because of, are we using Trello for follow-up? Do we use Jotform to input data so when it goes to Brooke, she can process it? Like, all these things, you need to look at what is not the best use of my time, and how do I, as quickly as possible, delegate that, get rid of it if it's not necessary, or put some kind of technology in place for that.
And then I see, because I get to be around the office, there's Bard is saying, hey, for us to do client updates, let's use this piece of software. So everybody's iterating at the same time, and that's when it gets really exciting.
Yeah, right? You've niched down to where a person's saying, I need to own this thing.
Yeah.
And so in our world, Bard is responsible for essentially data gathering, and for the first 3 months of the engagement. He is responsible.
Yeah.
After 3 months, it then passes to Chris for the ongoing service and relationship side of it. Now he's responsible. And so the more clear that flow can be, the better.
So another way to increase revenue is to take smaller clients. So an example of this is have a junior advisor take smaller planning clients, because maybe you don't want to turn down a $4,000 plan, but you don't want to take that plan. And some of you are like, oh, I'll take a $4,000 plan.
Oh, yeah.
But the point is, as you progress, and we had some advisors in our community that just won't touch a plan unless it's probably $8K or more, but they don't want to turn down a $3,000 or $4,000 plan.
Yeah.
And so they're saying to their junior advisor, do you want to take this? And the junior advisor is, yeah, I'll take
Yes,
that
please.
one.
Yeah.
Yes,
I mean, my buddy Wes, who's in our community, I mean, talk about somebody that can take action on things quickly, which I love, is that when he was going through our content, I think it was almost like you flicked a switch and he was like, great idea. All the plans are going to this person.
Right.
And soon, we'll keep asking him, like, we're going to have a number from him of like, here were plans I would have turned down. Now our firm generates an extra 100,000 of revenue. This younger advisor is getting more reps. Oh, and it's feeding AUM into our practice.
Yeah.
Probably wasn't the best use of his time. We would have probably coached him individually to just say no and kind of scale up. But because he had help and people on the team, it was like, well, why would I turn it away if these people could still benefit from the company and the system I built? I just don't have to be the one doing everything.
Yeah. And then what a tremendous blessing for that junior advisor.
Goodness, I look back and I was like, man, if somebody would give me business, like say, here you go. I was like,
Let's call West Santa. Hey,
seriously.
Santa, thank you. Right. Father Christmas. The number 6, joint work. Again, 50% of something is better than 0% of nothing. So like when you think about bringing other people, working with other advisors, I know some advisors have reached out to you, but if you're an advisor and you're thinking like, gosh, I don't know if I want to include someone else in this planning stuff. Like, how do you incorporate other advisors?
I think you have to look long term. I think I look back when I was a young advisor and there was this kind of a scarcity mindset, and it was like, man, this could be the last client I ever get in my life, so I better hold on tight to it, and nobody can be in there.
Yeah.
I'm fortunate that some people pressed into me, and I did accept joint work early on and got to see reps. It accelerated my learning curve a lot.
Yeah.
But if you run into a situation and you're like, I believe planning is a great option. This seems complex. They're a business owner. They have this estate stuff going on. It is in your best interest and the client to phone a friend.
Yeah, that's a great point. Like what's really best for the client here? No. And let's just be honest. It's probably not you because you want to make an extra grand.
That's right.
Like give it up and make sure that client is really well taken care of.
And I think if you look at the compounding benefit, I'm able to say now that I went to a conference 4 or 5 years ago, spent $800-900, whatever it was, and it's now turned into this multi-million-dollar planning practice.
Absolutely.
Great return on investment.
Yeah.
Same thing with joint work. It's like, and I've been called with advisors and they say, I will take nothing. Like you take all the fee the client wants to pay, but can I watch you do what you do? Awesome. Because they know if they see it once or twice, now they'll go get 50 more over time, and it pales in comparison. So don't be afraid of joint work. Obviously that's what a part of our community is like, hey, be around other advisors doing it that are generous with their ideas.
Yeah. Get
off the island and don't recreate things that people have already kind of blazed the trail on. Like draft behind them. Yeah.
I think that same principle is true, like draft behind ideas. We were having an idea sharing call last week. We'll have another one this week with our community. And it was just other advisors. And I just love the humility of like, sharing ideas with each other. And again, what's funny is they're getting those ideas from other people. Like it's like no one has to be the person who owns the idea. It's just about sharing ideas.
Yep.
Right? No one's like, that recipe doesn't count because you got it from someone else. Like, no, it still produces
still really good. That's right.
Yep. So last one, don't give them an all or nothing scenario. What does this mean? Again, the premise of this is ways to increase revenue. So what do you mean and how does it help revenue when you're not giving them an all or nothing scenario? How do you price that?
First, I have to say
because we're talking about pricing.
Yeah. You have to understand that most clients have not experienced this before.
That's good.
Most clients, business owners, anybody with assets, their experience has probably been I sat with somebody and they sold me something. They managed my money. They sold me some insurance. Like that is their baseline for normal.
Sure.
So if you meet with somebody and you're like, hey, you're going to write me a check. Your fee is not going to be hidden in the insurance policy or hidden in the investment account. There's not quite, they can't touch it. This is like, you see it. You need to be able to, and I learned this the hard way, if I went in there and with the information I had, put a proposal together and said, hey, to work with me is $8,000. To them, it's a yes or no. Like I didn't give them a couple
one
routes.
yes or one no. Period.
Yep.
Yeah.
We've evolved that to where at times, and sometimes it's very obvious, and we can say, hey, here's our flat fee for that. Here's a very clear service model. We can go to them and say, here's option one, and this is us white gloving it for you. Because you're telling us you want to turn it all over and you want us to talk to your CPA, talk to your attorney, track all this for you. Like that's pretty labor intensive. Here's that fee. Yeah. And sometimes say that could be $18,000 a year. Or we can put the plan together and deliver it and coach you through it, but you're in charge of all the implementation on your own. We're totally out of that. And that's a $8,000 fee. but we're very clear that, hey, instead of 4 meetings a year, you get 2, and you don't get to call us every week with like the service model has to match the fee. But now I've let them say, I believe in you. I'm confident. I'm just maybe not ready to jump to the full meal deal.
Yeah.
Let me experience you first this way, and we can always increase it later.
Yeah.
So we've evolved our proposals to saying, is there rarely 1, probably 2, even sometimes 3, to where we say, hey, we're happy to help you with that cost segregation project, but that's going to be a flat fee in addition, because we have to cover our time.
Sure. And do you ever say, and if someone says, okay, I'll do the 8, but I need to do it in 2 payments, would you ever go, yeah? Or do you ever get that?
Yeah, we're flexible. If they pay us over time, there's a discount if they pay up front or pay over time. There's different structures depending on your compliance and everything. But for us, I know that if somebody wants to pay me monthly and we deliver a plan, there's some kind of risk premium to that of us, hey, here's a full plan, here's the ideas, and you could just bail and not pay us
One of the
again.
reasons I don't like monthly, and we have some advisors that work with that do monthly, is if you're doing, like if I pay for Netflix every month, I expect to turn on Netflix and it should be working, right?
Yeah.
But you're not necessarily every month doing something for that client. So sometimes you're like, what did you do for me last month?
That's right. But the tough thing about the one-time big fee is that they're like, hey, we did a bunch of work, a heavy lift, and then we don't hear from you for a while. So we've adjusted our process to where every client, regardless of how they pay or what tier they are, they get some kind of monthly update on their plan.
Yeah.
And that gives them like, oh, here they are. Yep. It prompts us to say, hey, we're waiting on this thing.
Yeah.
And in a matter of an hour, I can go sit down with Bart and Chris and go through all of our reports and update them in a month. And now our clients know, hey, we're getting pinged. We're getting pinged. So
the analogy I want to share with advisors, if you're like, well, what if nothing happened that month? It's really the equivalent of going to the doctor's office and the doctor's saying, hey, everything's good. And you don't go be like, well, I want my money back. Like, no, like you're keeping you updated that things are good.
Yep.
This is the status. And
it's also a ping for them to tell you, because I mean, how many times advisors listening do you meet with a client and they're like, oh, actually, I sold my house 2 months ago. I was like, why didn't you tell me that? Like, well, life's happening to all of us, and them getting that monthly report as a PDF.
So it prompts them to say, oh, I had a financial event, by the way.
Yeah.
Right?
And so they get this attached PDF that's a report, but within the email, we're very targeted on like, hey, this is the thing we need to do this month. In order to do that, I need this from you. They then have an avenue to respond to an email and say, oh, hey, this changed. Can we do this? It's us taking on ownership of, we are the thing driving this relationship. We're not just charging them and saying, well, you never called me. And I've had advisors say that. Like, I've had clients come to me, and these were not friends, but associated with the same broker dealer back in the day. And I would meet a client somewhere that happened to be theirs, and I'd find out at some point, or they would, that advisor moved. And when you're in a system, sometimes you know that like it went to an advisor in the same company. And they're like, well, if they need help, they can just call me. I'm like, no, that's not the point. Like, you haven't talked to them for 2 years and they want somebody to talk to. Like, so you need to take, in my opinion, the ownership is on the advisor to set expectations up front and follow through.
Right. Well, we hope that those have been practical ways for you to help increase your planning and consulting revenue. And again, go to the show notes here. You can find our YouTube channel there if you ever wanted to see that we didn't wear the exact same thing today. I wore my legacy
I have 5 of these black shirts. So that's fine.
Jacket today.
Oh boy,
it's last year's Christmas gift.
Yeah. But I'm excited about the January event. I mean, that's something that we're going to blow it out of the water, and people are going to come, and that's going to change your practice, pay for itself 10 times over. So if you're looking for something to say, I want to meaningfully invest in my practice, I don't want to just keep doing more of the same stuff harder, and hopefully it works out, this is the kind of event you should go to.
Yeah. So find that link in the show notes. And as always, thanks for listening. Well, we trust that today's episode has provided you with some actionable ideas you'll take to heart and put into practice in your business. And if you're hearing this before November 22nd, then go to stenmorgan.com/50K to register for one of our free training sessions. Or if it's after that date, you can go get the replay at that same URL, stenmorgan.com/50K. Our goal in hosting a live event at our offices outside of Nashville in January of 2023 are for any attendee who comes to get 10x the return in the first 6 months after the event. So if you're serious about growing your financial planning business, then I invite you to visit stenmorgan.com/howtolive. And if you have any questions about the event, then you can also book an appointment with me at that URL to get those questions answered. Both those links are in our episode description as well. Lastly, to make the conversation with your spouse maybe a little bit easier, if you register before December 1st, 2022, you'll receive $400 off of your registration when you use the discount code FREEHOTEL with no spaces, FREEHOTEL. And you can use that money towards, well, you guessed it, your hotel room. So thanks for listening. We appreciate you.